All right. Back to work tonight, guys. Thursday evening already. One more day left this week. We got a big one. We got Non-Farm Friday coming right around the corner. It's Thursday evening. We're getting ready for Friday's trading setups. I got a bunch of great trades setting up for finally Friday's trading session. You know me, I'm going to make sure we cover all my favorite trades in tonight's video, that we have a game plan to make some money tomorrow. As always, before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video. And as always, if you guys enjoyed this video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Non-Farm Friday. Really the biggest news of the week coming tomorrow. And boy, everything is bullish as we go into tomorrow morning's Friday trading session. We got bull market on the Nasdaq, bull market on the S&P, bullish on the crude oil. I believe right now we're in the biggest winning streak of the year for the Nasdaq and the S&P right now. So bulls are full control of momentum on the oil as well, with some really nice big moves today. Anytime we see big moves in one direction, looking for nice pullbacks here. Would love to get some pullbacks really across the board here on the S&P, the Nasdaq, and the crude oil. We may also see some ranges here as we go into some big news tomorrow morning. So you got to be waiting for those ranges, trading failures, trading breakouts. So I'll tell you, there is no shortage of great trades setting up for Friday. I'm going to make sure you guys know how to make some money on those setups here of this video here tonight. Now, speaking of tomorrow, we've talked about the big news coming tomorrow. In case you weren't here earlier on this week, don't forget we do have arguably what could be not just the biggest news of the week, but the biggest news of the month, because as I've been mentioning throughout the week here this week, the Fed has made it very clear they are watching the employment market, the employment situation, the jobs market very closely right now, and we assume this big non-farm payroll number tomorrow morning will be on everyone's radar. Now, one thing you want to keep in mind about Non-Farm Friday, it is one of the biggest news reports of the month. And so you've got to kind of keep in mind overnight tonight, things may be a bit sluggish overnight. Remember, trading is a lot like riding a bicycle. It's much easier when it's moving. So if things are slow overnight, don't force trades. Turn a real slow market. We know what they're waiting for tomorrow at 8:30, but tomorrow morning by 8:45, 8:50, before that 9 o'clock, top of the hour, we generally start to see the employment number has come out, the markets kind of regain their composure, and we go looking for trade setups after that news comes. Remember, we do not trade the news. We wait to see what the market thinks of the news, and we, of course, trade the reaction right along with it. We do, of course, also have John Williams tomorrow. Let's see, he's twice in the calendar for tomorrow. It doesn't look like Fed speakers are that big of a deal right now. They did a pretty good job at telling us what their game plan was at the Fed the last two meetings. So I don't expect those to be the big market movers for tomorrow, but hey, we will be keeping an eye open for any time Fed speak hits the news wires tomorrow. That always has potential to move these markets. So 8:30 Eastern time, that's your big news. Remember, don't force stuff overnight. If it's slow, hopefully it's not, right? Hopefully get a nice active overnight session for you guys. But if it is slow, be aware that employment number is what everybody's waiting for tomorrow morning. And again, we're not jumping in right at the news. We're going to wait until about 8:40, 8:45, wait for the chaos to calm down, and then once we know how the market thinks of it, we'll trade the reaction tomorrow morning in the trade room. Back to our charts tonight, though. Nasdaq, S&P, crude oil, we're all ready to go here. Glad to see you are ready right along with me. Now, whether you trade one of these markets or you trade all of these markets, make sure you watch all the way to the end, because I'm going to do different trade ideas, different advanced tactics as I go deeper into this video tonight. And remember, I always try to save the best stuff towards the end, so I'll give you a reason to watch all the way through to the end. So grab some notes, grab some screenshots. Let's get ready for tomorrow here. Starting off first here on the Nasdaq, or the micro Nasdaq, or the QQQs, or whatever counterpart you might be trading that is based in the Nasdaq. There are three key components right now that kind of are helping me put together a roadmap for finding the best profitable trades for tomorrow. Three keys to success. One big key is that strong bull move. We talked about this last night on the video. Anytime we see a real strong move in one direction, we expect what? A pullback and a retest of that high, right? That's what we know is most likely. Now, from there, Will we double top off that high? Reversal, my favorite types of reversals. Or will we break out above that high and take out some of those next big levels up overhead? Think about that 12,285, 12,262. Those are likely targets if we do get that breakout going higher here. So first clue is strong move. We're looking to buy some pullbacks here at support levels for a retest of that high. Will it break out? Will it reverse? We don't know that yet. We'll wait and see, and I'll give you guys a game plan for that here in a moment. Next thing is no deep pullbacks, right? There was very little opportunity if you were staying patient today and waiting for a really deep pullback, because deep pullbacks are great because they give us a good risk reward ratio, small amount of risk for a big amount of reward. But there was no deep pullbacks today. What does that tell you? It tells you there's a lot of people out there with their powder dry right now, right? Who would love to dip their toe in a nice deep pullback right now. Now, a deep pullback is a really big clue, because it tells me momentum starts to play into it. I'm going to talk about that in a moment here, so keep that in the back of your mind. Deep pullback, momentum. Deep pullback, momentum. Next thing is a resistance trend line. Now, pullbacks, right? We're looking for a pullback here for tomorrow, until something changes, of course. The trend line coming down, you'll notice that most pullbacks, right? Most pullbacks are kind of what we call simple pullbacks. One leg, one leg, one leg. Most pullbacks are simple pullbacks. But every once in a while, when you get those deep pullbacks, they are what are called complex pullbacks, or basically a two-legged pullback. Sometimes there are two, even three legs on that pullback. Why does that matter to me or you? Because now that trend line comes in, and that trend line can be your best friend or your worst enemy, right? We want to buy a pullback here, because again, we're expecting that retest of that high, but at the same time, though, I don't want to trade into that trend line. I want to try to use that trend line as an entry on the opposite side, and we'll talk some strategy on that here as we go. So we know these three components: strong move, buy a pullback. Deep, right? No deep pullbacks. Anticipate deep pullback, big momentum, right? And resistance trend line really helps us refine the entry technique to use on this. So how do we make some money on this? The most important thing is to get that deep pullback, right? To get that deep pullback right now, we've got to get obviously a lot deeper on this chart. I've got some great areas of support ready to go. I've drawn my channel off the highs, bring it down off that low. I like this whole area here. When you get that deep pullback, though, remember, momentum. Momentum is the concern. So how do we adjust for momentum? This is where we use what we call the two-try rule. Now, last night we talked about how one of my favorite trades in a bull market is to get below the 21 moving average, wait for sellers to come in and get short. And once they get short, think about where their stops are, right? Where are their stops? Or as I always say, where's their pain, right? That's guys, the easiest money you're going to make in a bull market is waiting for a deep pullback, trapping in the bears, and then using their stops as basically just gasoline, right? As fuel to go back up and retest the high. So think about that basic idea here, but now deep pullback, let them try twice. And the idea here is pretty simple. We want to get, as we pull back here, I want to get bears trying once, I want to get bears trying twice, and ideally, again, I want to try to use that trend line as my entry. Now, there's a couple ways these oftentimes will set up. This is kind of the ideal. Well, actually, the ideal scenario is if we can get a two-try that goes below that prior swing. That's the ideal, right? If you look up the perfect deep pullback in the Trader's Dictionary, that is it right there. One try for the sellers, two try for the sellers. Again, why? Why two? Because the deep pullback that we need right now. And then, of course, that trend line comes down, and we can use that trend line. This could be a trap below that prior swing, right? It could also just be a simple bounce off that trend line. Very, very reliable deep pullback. Two-try failure is what I call that setup. Now, keep in mind of this. Here's one very common variation of this. Sometimes there's so many buyers down here that the market will just kind of shoot back up like that, right? And you're going, wait a second, come back to me, right? It's not going to come back, right? It probably won't come back. In that case, what you want to do is, remember, where do the buyers want to get right now? They want to get back up to retest that high. Okay, so now I've got to get in before I get back to those highs. What you want to look for here is a trap. Traps are always going to be my favorite entry technique whenever I'm worried about buying too high, which is exactly what the problem will be as we make our way back up to retest the high, right? That high, that's the objective. That's all we know right now, okay? That's all we know for sure right now. So as we get that deep pullback, if we don't get that 1, 2, and then back up, and all we get is that, right, is that pop back higher now, the moving average will come over, look for that little trap entry, and finish it off for that retest of that high. That's a great variation of it if we don't get, right, if we don't get that perfect kind of 2-try pullback that we mentioned there before. Now, very common ahead of non-farm payrolls. Oh, and one more thing here. What if we end up, how would this market reverse going back down again? I'll talk about the reversals here a little bit later on, right? We'll cover reversals a little bit later on in this video, right? So stay tuned for more on that because, as you can imagine, on this deep pullback, the deep pullback may end up reversing here. I want to make sure you guys know how to trade that reversal because it will happen. It will happen sometimes. And with big news tomorrow, you got to be ready for that. Now, one more thing here. Ahead of news, we oftentimes see ranges. So it's really important right now that we kind of get familiar with how to trade a range here because ranges are pretty common, especially ahead of news and especially after a really big move like that. There are 2 basic ideas of what you want to be ready for when it comes to a range. You can almost kind of see the range already, right? You can almost kind of see it forming right about there. It's a little bit too close to call it a range just yet, but that range looks like it might be starting to kind of flesh out here overnight. If we have this range develop overnight, what you want to do is you want to think about now, there are 2 basic types of trades in a range market. One is I still want to get down to support levels down here, but that range is a magnet, right? Ranges act like magnets. So what you want to do is you want to wait for that breakout. It's a really simple strategy. Wait for the breakout, wait for the moving average to come over. Again, look for ways to trap in the sellers trying to sell in once they get short, once that red candle shows up, and you'll learn more about that in our free trading class on the website. But think about where those stops are again and hit them right into those stops. Right now, there's one more follow-up trade I like to use on this, and that is as we go higher, I'll find a new trend line off that high, mark a new channel off that low, and grab that first test off the low of that channel. Makes sense? This is called a failure pattern, right? Failure pattern. And then off the low of this channel, I can take pretty much any of the price action setups that we talk about in the free trading course. So a trap pattern, a failure pattern, a pullback pattern off the low of that channel. Which reminds me, I know that most of you guys have taken the free course. You've learned all these setups. I get so many great emails every week from you guys making money with this stuff on your own. So it's inspiring to me. But listen, if you haven't taken that class yet, if you haven't learned all the entry tactics, right? I'm covering the basics here right now. You got to grab the free trading course on our website. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, get registered, and learn the roadmap. If you're like me and you hate missing the best trades each day, or you're taking too many losses, you're making too many mental mistakes, or like a lot of my students, if you're trying to transition from working a full-time job to trading full-time, the roadmap I teach in that free trading course will get you right on the right track and start getting you some good results out of your trading. I know we all want good results of this stuff, right? So grab that free course. You're going to love it. You're going to love it. And let me know how it goes. I want to hear how well you do with it as well. So now we know if we get that range, here, wait for that pullback, that failure off the moving average, right? And then again, as we go higher, I want to find that new channel off that high and grab that first pullback. Those are the 2 ways to the range. But oftentimes, though, what happens in a range is oftentimes it'll slingshot and blast out the high. How do we buy a breakout going higher? What if this happens? What if we end up going sideways tomorrow during the news? And then all of a sudden the news comes out, it's good, it's bad, I don't know what's going to be, right? And the market jumps. right? How do we trade that breakout? What would a breakout look like? There are 3 really simple breakout patterns you want to keep on your radar for tomorrow because, again, it's a news event tomorrow, so it could easily go sideways here overnight. There are 3 breakouts, okay? These are really, really simple, and they go in order. The first one's called a 2-try breakout. Strong move, shallow pullback, higher high in price. Stay with me. Traps, baby, right? Traps, baby. One of my favorite trades. Okay, again, it's a strong move, right? Strong pop out of the range, shallow pullback. That shallow pullback is one of the most important parts because it drives pullback traders crazy. It creates FOMO, right? That shallow pullback creates FOMO in the market. And so when you get that higher high confirms it's not just a V-top, right, is basically what it does. And the higher high confirms the move for us. That trap is a money trap, right? That is a money trap. Now, here's a really easy way to find a good target. Take the size of that first leg and the size of the third leg. Make sense? Size that breakout leg, size that third leg, okay? That'll give you a good way to really streamline or fine-tune that exit as you go higher. We already know kind of where the market wants to go. 262, 285 up there, right? We know where those levels are. Okay, that's the first one. The next one is a pop and grind, right? Pop and grinds are everywhere right now. This is a pop and grind, right? This right here is a pop and grind. One of my favorite channels. Again, we're in a range now, right? And we're in a range now. We pop up. We pull back very shallow, and we start to grind and grind and grind. What do we do in that situation? We draw a trend line off those highs. We mark it up off the big low. I know that seems crazy, but trust me, once you see a couple of these work for you, you'll be a believer like I am. Find that prior swing. Okay, look left, find those prior swings, get under prior swings. That's where the traps come in. Get underneath the moving average. That's where you can trap in those bears and you can run those stops with traps, with failures, with pullbacks. And remember, again, that first leg and that third leg, right? That first leg and that third leg. Those are the ones that you want to think about. Ready for the last one? Right? Third breakout pattern. This is the easy one. This is a really easy one. It's a 1-2-3 breakout, right? 1-2-3 breakout. Strong move up. Now we don't just grind higher. We pull back and we blast, right? We jump off that moving average, right? It'll look like that, right? It'll jump off that moving average. Okay, remember, we don't want to just buy that first pullback because it's a range. And again, in this case, it's a range. So we wait for that 1-2 jump. Then as it goes higher, we start to think about a new channel. I'm going to mark up that high. I'm going to mark up that low now. Look for that prior swing. Again, I love traps. You'll see why in my free trading class that I mentioned earlier. Traps, failures, pullbacks, and go, right? First leg and third leg. Make sense there? Okay, so now we know how to trade the range, right? How to trade the pullback, the breakouts. We also know how to watch that trend line coming down, some variations on that pullback. Here's another question for you. What if the market keeps on going higher? What if we get none of those? And how do we sell this thing, by the way? Right? Can I sell this thing back down again? Absolutely, with the right setup. Let's cover that in the S&P. Let's go to the S&P now. And of course, like most times, the S&P and the Nasdaq are very, very similar. In fact, all 3 of these charts are relatively similar here with a little bit of tweak here and there. Over on the S&P or the micro S&P or the SPY or any other variation of the Emini S&P here that we see around the world these days, it all works as long as it's a liquid market. There are 3 basic rules, 3 basic keys to this success tomorrow. First one is same thing, right? Strong move. Anytime we see a strong move in one direction, we expect a pull back and a retest of that high, right? We know, of course, that pullback. We talked about this already. Second thing is no deep pullbacks. So why is it important? Because we're anticipating there's a lot of powder dry. There's a lot of bullets waiting down there to buy up this pullback here. But with that deep pullback comes, what was it again? Momentum. Momentum is a challenge. And then, there's that resistance trend line coming down. Again, use this to your advantage. A lot of pullbacks are single legs, right? A lot of pullbacks are single legs, right? There's a complex pullback right there. It's going to pull back, right? 2 legs right there. Anyways, this one pulls back. Draw that trend line down, same idea. So we've covered a lot of this already, right? We've already talked about how to get it lower, 1, 2, up around that trend line. I'm not going to bore you guys by repeating this all over again, right? We also talked about if it runs higher without it, grab that trap and that retest, right? We covered this in the NASDAQ. We also talked about if we go sideways, which is very likely ahead of that news tomorrow, where we talked about how we can buy that failure below that low. Trade those breakouts, right? There were 3 different breakout patterns we talked about going higher. All of that can apply now to the S&P 500. And where do we think it wants to go? It wants to go up into this area here. We've got 39.48 is that big end of June high, last week of June high up there. That whole 39.50 area really is the big objective here for us. Now, we left off on the NASDAQ. What if we keep going higher? Right? What if this market just won't pull back here for us? It doesn't go sideways. It says, heck with it. I'm going to go higher here. What do we do in that case? Well, really at that point, all we do at that point is we simply adjust our channel. Let's say, for example, we've got this move going higher here, right? And then we keep grinding higher, right? If we keep grinding higher, what I'll do is I'll simply adjust that channel a little bit steeper, find that hidden channel, and I'm looking for the same exact thing over and over again, right? I want to get down to that low. I'm going to trap in some of those bears off of the moving average, get that 1, that 2, and back up, right? Same basic idea if it continues to grind higher. Right? So if we continue this kind of slow melt up as we go higher, not a lot has changed here, guys. The buyers are still waiting for a deep pullback. We still haven't seen any meaningful pullbacks. The one kind of variation of that would be is if we do end up grinding higher here, will we get that 2-legged pullback? You know, that's probably the only thing I can't really anticipate here, for tomorrow. Will there be a 2-legged pullback on it? And if there is, you know what to do with that, right? So keep an eye on that if it keeps on grinding higher. What is also very possible is we may see, we may see that kind of range overnight. The market may break out and run higher. Remember, the market will open up, and pretty much it's a brand new session. We know where the market wants to go. So if I see this thing open up and all of a sudden we're popping up, we're holding that pullback, we're jumping off that moving average now, it's game on. It's game on. We're going to find that new channel off that high, right? Mark up that big low, look left, find those prior swings, and we're trying to grab. And again, I'm keeping it very simple here right now, just for simplicity purposes here. That could be a trap, it could be a failure, it could be a pullback combo as we go back above that 21 EMA. But again, if the market keeps on going higher here, watch that new channel, or watch that pop and that grind. Right? If it pops and grinds, this is the big clue. We're not looking for those big channels anymore. Right? If it pops and grinds, we draw that trend line nice and tight, we mark it off that major swing, and we look left, we find those prior swings, get underneath those prior swings, get underneath that moving average, let those bears come in and try to get short off the EMA. That tells us exactly where their stops are. Remember, first leg, third leg, that'll help you kind of refine that final target as we go higher here. So that is going to be, remember, if we keep pushing higher, a lot of this game plan really stays the same for the most part. Now, how do we sell this market? This is the good stuff, right? How do we sell this market right now on the E-mini? And again, this will also apply to the NASDAQ as well. Well, first of all, we know we know the bulls, they want to get that pullback and they want to retest. So the 2 places where we can sell this thing are going to be either 1, off that double top, one of my favorites, or 2, if we break through of that, right? If we disconnect off of that, right, off of that move. Those are the 2 spots now where we have our opportunity right now. I really can't sell up here yet. Not with this much bullishness. This market could easily keep on grinding higher here overnight, and we may see a squeeze going higher here with the news tomorrow. Right now, let's talk about those 2 scenarios. So first of all, what if we pull back? If we pull back here right now, the 2 most common reversals you're going to get when a pullback turns into a reversal is going to be either the 1-2-3 reversal, which basically means we pull back, we get into support, we pull back to the moving average, and the bears jump. right? The bears jump. They blast, as we say, right? They jump off that moving average. It will look like this. It will go 1, 2, jump, right? It'll go 1, 2, jump, right? It'll jump off that moving average. Once those bears jump off the EMA, now we know the bears have control. Where do they probably want to go? There's a magnet down here. There's a range down there, right? That range magnet. We can obviously use the first leg and the third leg as well. So this is a 1, 2 blast, right? 1, 2, 3 reversal pattern. I mark off those lows. I bring it up around that high. I mark up those prior swings, and we're now looking for that first test, right? Because the first test is the best test. I want to get above that prior swing for a trap. I want to let those buyers come in and try to buy at that point. No. Once the bears hold and jump, this is not a buyer's market any longer. It's a bear market at that point. And once those buyers come in and try to buy off the moving average, I see you, I know exactly where your stops are, and I can use them as fuel. Those are my favorite ways to trade at the top of that channel. First leg, third leg, that'll really give you an idea of where that final kind of objective will be on that 1, 2, 3 reversal. Another one that's very common is when we pull back. And now we may not get that, that pullback and that blast, right? Now it pulls back and it starts to grind and grind and grind. And these are very easy giveaways. These happen a lot in summertime markets. Look left. You can see a really good example of that pop up and grinds higher here, right? And just like I'm looking for that channel backwards here and here is the exact same reason why I'll draw my trend line off that low. I'll bring it up around that big high, right? We start looking for prior swings and we look for that short off that first test. Again, first leg, third leg. That'll give you an idea of how to time that exit to really squeeze as much profit out of that reversal as possible. So again, this could be a trap, it could be a failure, any of the price action setups we see in that free course that I mentioned earlier on in the lesson tonight. That is another very common reversal pattern, or reversal setup that we may see as the pullback starts to get a little bit too bearish and it kind of deteriorates and kind of disconnects, as we say, as it goes lower. Okay, those are a couple ways to watch if the pullback turns into a reversal. Last but not least on the S&P, we'll wrap things up on the crude tonight, is what if we do get that deep pullback? We get that 1, we get that 2, we go back up to retest the high, or any variation of that as we go. Now what do we do? Can we sell this thing? Well, first of all, we already know we're really bullish, right? This is not a bear market. So if I want to sell this, I have to, I do not have momentum on my side. Momentum, like right here, momentum combined with running stops is what gives me the edge. It's difficult to lose money, to be honest with you. It's difficult to lose money when you combine the right momentum with a good level of support and you're running stops. It's a recipe for, I can't say guaranteed, obviously, nothing's ever guaranteed, but it's tough to lose on that trade when you combine momentum with a good level of support and running some stops. When we go up here, we do not have momentum. We have a good level of resistance, but we need to what? We need to run some stops. We need those buyers. Remember, the smart money is getting in down here, right? The smart money is getting in nice and low. The weak hands, the quote-unquote dumb money, right? The brand new traders, the sucker at the poker table who wants to learn to play, right? That's who's buying up here now. Let them try a couple times and then look for those stops. Think about if I was a buyer, where would my stop be? Okay, imagine for a moment you don't know what you're doing anymore, right? Imagine you were the trader before you started listening to or watching these newsletter videos every evening, right? The buyers come in, they buy twice, and we're literally waiting for that nice strong signal. And again, I'll go over all the entry signals in that free trading course linked up there above. Once we get that signal, though, then we can get that short going on. Now, really, really important, where do the bears want to go now? They want to go and take out that low. Okay, that's important. Why? Because now as the market rolls over and runs lower now my job is to find that new channel off that low, off that high. You know me, look left, find those prior swings and get that short. That first test is the best test off the high of that channel. Remember, the goal of this is do it before we get where? Back to that deep pullback low. Make sense on that one? Okay. So again, it's a 2-try failure off the high. At that point, it'll be mission accomplished for the buyers, right? The buyers will have already gone back and retested. Let the buyers try a couple times, sell right into those stops. And then as it rolls over, then we look for that first test off that high, take some profit off at that low. And if you got an extra contract left, leave that runner back down into that trading range here below. That's another easy way to sell. But again, right, we're going to wait for that retest and then go from there. At this point, I think we've covered all the bases. We know how to trade ranges. We know how to trade a breakout going higher. We know how to trade those deep pullbacks, and we know how to turn a deep pullback into a reversal. By the way, if you're enjoying this video right now, do me a favor. Let me know in the comment section, what's the most valuable part of these lessons for you? I want to make sure I do more of that in next week's videos. And while you're down there, hit that like button. Make sure you subscribe. Set that bell icon notifications so you don't miss our next video upload. Looking good here. Got the E-mini also to go. S&P set to go here. Let's wrap things up here tonight. On the black gold, the Texas T, the crude oil futures, or the USO, or the micro crude oil, whatever your fancy is in these markets. Oil, as we mentioned in last night's video, caught a bid today, along with everything else here in these markets. There are 3 basic kind of key components to my roadmap for tomorrow. One of them, of course, is bullish, right? We are bullish into a trading range. We just talked about this before, didn't we, right? So we know what this means, right? We know that a range is a magnet. And so we know that we're looking for what? For support levels below the range, okay? Now, there's one little wrinkle in this one, and that is rotation off the range high. Rotation off the range high. We talked about ranges earlier. There is a very big difference between a bull market into a range that pulls back, and I can use stops as fuel, right? Very big difference between that and this. Bull market to a trading range that goes up and then comes back down, right? What's the difference? The difference is momentum. Remember, momentum is the lifeblood. It is the key to short-term trading. If you want to use small stops and big targets, learn to understand momentum. And no, I'm not talking about RSI or MACD or any of those waste of time oscillators that are so lagging. Stay away from momentum indicators. Get those momentum indicators off your chart. They're going to waste your time, and they give so many false signals. They look great in hindsight. You know what I'm talking about. Anyways, momentum coming off that high. When that momentum comes off that high now, what's the problem? Bears, right? The bears are going to see this and go, oh, I want to really hit this thing and go lower. This is where the two-try rule comes into play. We let those bears dig their own grave, right? Wrap that noose around the neck and then pop it higher. Okay, that's a really big part of this for tomorrow. And you can see it right there. There's that trading range. And so watch for this also on the NASDAQ. Watch for this setup possibly on the S&P as well. Because again, we may go into a range here more overnight. And then one more clue. This may not be that important, but we mentioned last night that $100 a barrel, it's the granddaddy of all big round numbers. I also mentioned last night that one of the big reasons why I was a little more bullish than bearish in last night's video was because we'd gone to that 95. We'd failed to retest 95. And if you recall from last night's video, I said, wait a second, you're telling me that oil, which loves to go $5 moves, right? 95 to 100, 100 to 105, right? 110. The $5 moves are like clockwork on the oil these days. And as I mentioned last night, you're telling me that you went all the way down there and didn't finish that 95 level. Well, now look, we are here. We just did the same thing, right? We just missed that 105. Wait a second. You're telling me you went all the way from 100, ran higher, and you couldn't get the 105? Really? That seems like something's wrong. There's a little bit of smoke. And there's smoke, there could be fire. Why is it important? Because the day began with a range. We get $100 a barrel right there. Big magnet area, right? Big magnet area right there. Now, what does that really tell me? Well, what that tells me is as we rotate off the high of that range, is it possible here we might get one of those 1-2 blasts? Yeah. Is it possible here we may just keep on grinding down? Yeah, right? That is another option we want to be talking about here because, again, sometimes those deep pullbacks, they disconnect. and they turn into reversals. And so I want you guys to be ready for that first pullback if we do get that reversal. Also, well, let's jump right into it, right? So how do we make some money in this? So we already know right away, watch that trend line, right, coming down. That trend line is not going to be a big problem right now, okay? That trend line, that's why I didn't put it on here. It's not going to be an issue. What is an issue, though, is it's really very similar to the S&P and the Nasdaq. As we go lower, deep pullback, right, levels of support, levels of support, levels of support. So I like this whole area down here. But again, I've got to use that. What was it again? That 1, that 2. Now, when it comes to these 2 try failures, I kind of teased this a little bit earlier here. The best entry is always that trap right below that first try. So bears once, bears twice. This is definitely not required, but I'll tell you right now, if you can get something like that on that deep pullback, that is a beautiful, beautiful entry. Also too, right? Also, remember, the whole goal of this is to rope in those bears, right? Get those bears coming in, let them try twice, and then use their stop losses, right? Their stops as fuel. And then as we go higher here, remember, as we go higher, I can then look for that new channel off that high, off that low, and buy that first test as we go, right? 2 try failure, first test is the best test. What we're trying to go here, back up to retest that high, right? So keep that kind of set up here on your radar as we go. Then what if we do end up pulling back and grinding, right? What if we do end up going lower and the market just keeps on going, right? We keep on grinding, keep on grinding. That is so easy to happen right now because, again, we've talked about this already. Momentum shifts off the high. We missed the 105, granddaddy of round numbers. Okay, mark off that low, mark off that big high, right? Yep, and then get that first test off the high there. Remember, first test is the best test. And although at this point it looks like first leg, third leg, we'll know more tomorrow, obviously, but definitely $100 a barrel, 98.33, right? These areas down here are big objectives here as we go. Again, we may also simply pull back. The bears may come in and they may clock this sucker and run this thing going lower. That's called a 1, 2, 3 breakdown or reversal. Mark that low, mark that high, find that swing, and grab that trap, baby, right? Traps are the money trade off the highs of those channels. So keep your eyes on that, right? Keep your eye on that. Now, that's if the market goes lower. How do we trade this thing as it goes higher here, right? What's the game plan now as it goes higher? Well, what is one difference between the S&P and the Nasdaq and crude oil? Do you see it? There's one difference here that is not on the E-minis. It's the retest. On the S&P and the Nasdaq, you'll notice we have strong move trying to retest, right? Strong move trying to retest. You'll notice here right now, we don't have that on the oil. Oil has already gone up, strong move, pulled back, and retested. This is a really big clue here right now. What it basically tells me is if the buyers come in and if they buy that pullback, I've got to be very careful here trying to sell into that high. Right? At this point now, if the buyers come in and hold this thing, it's very likely now they're going to break out through that high here. So watch that, right? Watch this range breakout again. Watch this 1, 2, and then as we pop up, is it one of those 2 try breakouts going higher? That is that's a viable option, right? 2 try breakout. Do we see that pop and grind going higher, right? I won't repeat this over and over again here tonight. I guess probably sick and tired of hearing about this stuff. But 1, 2, 3 breakout going higher, right? So watch that rotation off the low. Trap in those bears, and then as they blast running higher here now, look for that breakout, right? Look for that breakout here as we go, all right? If we keep going higher, remember, keep looking at those channels, keep waiting for those first pullback tests, and we're looking pretty good here on the crude oil. The biggest concern right now on oil is just simply getting that deep enough pullback, trapping in those bears, and getting that right and getting that retest of that range back up into that range. But again, be very careful as it rotates off that low. We're not trying to sell off that high unless we see a dramatic crown reversal, which would be something like this where, right, it pulls back, it tries once, pulls back, tries twice, really big separation between these two, and that's the type of trade you can take off that reversal in this situation. Got to be careful though, right? Got to be careful this one. These crown reversals with this 1, 2, it requires a lot of separation between those two tries. Why? Because we're so bullish. That's why. All right, guys? So watch that trading range. Watch to see if this pullback snaps and breaks down for that move going lower. And again, don't forget, tomorrow morning, 8:30 Eastern time, tomorrow morning, non-farm payrolls. Don't push this stuff overnight, right? Don't push things overnight. Get a good plan if we go higher, good plan if we go lower. Looking forward to tomorrow morning, you guys, in the trade room. Speaking of the trade room, did a good job tonight at planning our trades for tomorrow. Let's go out and trade our plan in the trade room tomorrow morning. We open up every morning, 8 o'clock Eastern time. I'll put all the membership links, all the free course links. Definitely start off the free course, learn the setups, get that going on your own computer, and then that'll get you ready for trading with us every morning in our trade room. If you're looking for a great place to learn and trade along, there's no better place to do it every morning in the trade room with me, 8 o'clock Eastern time. Everything you need there, I'll put all the links you guys need in the description of the YouTube video. Don't be afraid to call the office. We've got live chat. You can use the comment section of the video if you have any questions here as well. And I hope you guys learned a bunch here in this video lesson here tonight. But this is the easy stuff, right? Tomorrow, the fun stuff happens in the trade room. I'll see you guys there. If not, we'll come back and we'll do it next week. Come back next Monday after the weekend break. Hope you guys learned a lot. Hope you use this information to earn a lot tomorrow. And if I don't see you guys in the trade room, I'll see you guys back here, same time, same place. Not tomorrow night, but on Monday evening for the second week of the month of July. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.